Okay, students, welcome back to our tutorial class. So in this question, we are going to refer for questions in February 2022. Please refer to question number 2. Okay, as usual, we will have the theoretical part and also the computation part. Okay, for the theory part, let us look the question together. One Construction Berhad is a public listed company and planning to accept a major construction contract to build a new building for commercial purposes. The company decided to issue debt instrument to finance the construction. Okay, so debt instrument, you must know what is debt instrument. Define debt instrument and state 3 reasons for the company to issue debt instrument to the public. 4 marks. So, first thing, you have to define what is debt instrument. So, the most accurate answer is, it is the tool, okay, for business entity to utilize for the purpose of obtaining capital from the public and obliged to repay the capital over time. Okay. Right. And then you are required to identify the use, right? Why do the company wants to borrow loan? Why they want to incur debt? Is it necessary for company to incur debt? Yes. One of them is to raise fund for the company. And if the company cannot afford through equity method, they have to borrow. That is another alternative. Okay, from the money that they receive, the loan that they receive, they can buy non-current assets. Okay, for example, if you are involved in what we call manufacturing production, you need to have the sophisticated machine, right? Okay, to proceed with the manufacturing process. So the cost of machine quite pricey. So if you don't have enough money, you can borrow. So the money that you receive from the loan can be used to acquire the assets. And then you may also use the money to pay off another liabilities. Because you might have several debt. So in order for you to settle for another debt, you can use the money. Okay, so that's the question. That's the answer for the definition of debt instrument and the reasons for company to issue debt. Okay, let us continue on the next part, the computation. Okay, Tembila Berhad has been in business selling motor vehicle. The extract of the statement of financial position is provided below. So again, you are given the balance brought down as DCS at year end. And then you are given the information for 31st December 2021. So based on the question, in the first paragraph, you can see the company issue IPO. Okay, so the shares involved are ordinary shares, 3 million and 1,600,000 preference share. And the issue price for both are 80 cents. Okay, the next paragraph is talking about the amount that you receive. So amount you receive for ordinary shares 4 million and preference shares is 1 million. So again, you have extra ataupun excess application for ordinary share. Compare amount that you issue and amount you receive. As for the preference share, you have under subscription, no excess application. And then what are we going to do with the extra application? Reject and refund. Okay, the last paragraph is talking about issuance of debenture, where the company will issue 1 million 5% debenture at 98. Okay, meaning that the company will issue debenture at a discount. Do you have any issue cost? No. Okay, and the effective interest rate was 8%. The interest is to be paid at the end of the year, and the debenture is carried out at amortized cost. Okay, as usual, you are required to prepare the relevant journal entries. Narrations are not required. followed by the preparation of statement of financial position for equity and liability section only. Okay, let us look the answer together, class. Okay, so these are the answer. Issuance of ordinary shares. Okay, as you can see on the next step, okay, the answer is combining step number 2 and number 3. This is what I have mentioned you before. You can actually prepare the shortcut way, but for your level, I advise you to prepare the normal way. So for second step, okay, let me break down the answer first. Okay, instead of using this answer, okay, we are going to prepare the usual one. Debit OSA, credit what class? Credit bank, good. Debit OSA, how much? 800,000, betul? Yes, good. And then we credit what? Very good. Credit bank. Okay. Prepare the as what I've taught you. Credit bank 800,000. You know how to get 800,000, right? The amount that you reject times with the 80 cent issue price. Okay, then only you allot the share. How to allot the share? Debit OSA. How much? 2,400,000. Very good. 2,400,000. Okay, 2,400,000. And credit. Yes, very good. Credit the OSA. OSC. Ordinary share capital count. 2,400,000. Okay, that's how you break down the answer. Please prepare the normal way as I taught you. This is for the discussion. Okay. As for discussion, you, as you can see, is actually the same as what I taught you. Okay, as preferential capital, I think there is no problem, right? Very straight cut. Okay, debit bank, credit PSA, 800,000. And allot the share, debit preferential application, credit preferential capital, 800,000. Okay, last one, the debenture. Okay, you issue debenture at a discount, no issue cost. So what you have to record is, you just have to compute, okay, 1 million ringgit times with 0.98. Why 0.98? Because this is the issue price. You are issuing at the discount. So debit bank 980,000, credit 5% debenture 980,000. Okay, follow the next step. Okay, calculate for the finance charge. How much is the finance charge? Okay, the effective rate 8% times with the fair value 980,000 and times with 7/12. Why 7/12? Because you are issuing on 1st June 2021. So you are not occupied for the whole year. Since you are issuing at June, so you are going to be charged for the interest starting on June until December. June until December is 7 months, right? Okay, next, calculate for the amount to be paid. Okay, 5% times with 1 million, the nominal value times with 7/12. So you have 29,167. As compared to the finance charge, okay, you have underpaid. You have underpaid, right? So the outstanding value, the outstanding amount need to be credited to the 5% debenture. Okay, with the difference, 16,566 ringgit. So as usual, the last part, don't forget. Okay, the last step. What is the last step, class? It's not showing on this answer, but please, I want you to prepare. Okay, the last step will be debit. Good. Retain what? Okay, you get back to the question. The question use the retain earning or retain profit? Retain earning, okay. Huh? The question use Retained profit. Okay, so we have to be consistent in class. Debit, retained profit. Consistent with the question, How much? 45,733. Credit what? Finance charge or finance cost. Depends on how you present. If you are using finance cost, please be consistent, finance cost. If you are using finance charge, you can use finance charge. Don't worry. Both are the same. Okay, the same amount, 45,000. So, even though marks is not given for this step, because I told you it's just a formality, right? To close the finance charge, but please show on in your answer later on, Okay, last, let us continue on the statement of financial position. So, you just have to copy back the format. Okay, we are going to show the equity and the liability section, right? So, we start with the ordinary share. Okay, this is the working. How do you get the total? Followed by the preference share. Okay, please show your answer as follow. Provide the working in bracket on the face of the statement. And then the reserve. Okay, retained earning. Ini pun tak consistent. Please be consistent. Retained earning, retained profit. Last one, debenture. Do you know how to get the total of debenture? How to find the total? 980,000. Very good. Plus, yes, 16,566. Very good. So that's how you get the total. Please show the working. Okay, can we continue on the next question, the last one? Do you have any question on part A, on A and B? Alright, let us move to the next question. Tembila Berhad plans to offer bonus issue or rights issue to its existing shareholder. Do you still remember on this lesson? What is bonus issue? What is right issue? Okay, both are invitation to existing shareholders, right? But bonus issue is given for free, while right issue is given at a price lower than the market price. As a financial advisor of Tembila, so you have to assume yourself as the financial advisor. Advise the company whether to opt. Opt meaning to choose, whether to proceed, in other names, for bonus issue or right issue to the existing shareholders. So you have to advise Tembila Berhad, the BOD, whether to go for the bonus issue or right issue. What will be the best one? Why do you choose right issue? Very good. You know the concept. When you issue right issue, you'll get money, right? Okay. So let us, okay, you have 4 marks here. So let us elaborate the answer together. Okay, this is how you can present. Since you have 4 marks, right? Meaning you have to elaborate more. You cannot just say, okay, offer right issue because you got money. No, you have to make some comparison first. That is the best way. Okay, so you can see right issue, you issue to the existing shareholders at a price lower than the market price, right? Even though the price is lower than the market price, but you still get money, right? Compared to bonus issue, you give to existing shareholder for free. So you don't get money. Okay, you can add up. Okay, you can add up the reason why you give right issue. Okay, you want to increase the number of shareholding, and the reason why you give bonus issue. You see, different motive, right? We have different motive. Kan? Okay, therefore, as a conclusion, it is favorable. What do you mean favorable, class? Yes, better for the company to offer right issue. Why? Because based on the above reasons. Or you can elaborate using what we call in narration. Narration macam essay pun boleh instead of preparing table. As long as the content are there. Differentiate between both and make conclusion based on the characteristic. So the main point here is that the company need money. So by having more money, similar to having loan, you can expand your business, right? Okay, you can buy more asset, right? With the money, you can pay other liabilities, So that is the advantage of having right issue when you relate with the money that you receive. Okay, so that's all about July 2022.